Welcome to the Secrets to Abundant Living podcast. Your guide on this journey is Amy Silvas. If you're ready for the secrets to an abundant life, hit that subscribe button now, and let's get started.
Hello, everyone. This is Amy Silvas, your host to the Secrets to Abundant Living podcast. I'm so excited to welcome you today to another episode where we're going to talk about a topic that I'm incredibly passionate about. I think you all are too. We're going to give a little twist on it and some new information that you may not have heard before. So I'm really excited to go on this journey with you today. Before we get started, as always, I am just sharing education here. This is not financial advice. Taking you all on the educational journey that I've been on, talking about what I do, what you do. Please definitely make sure that you speak to a financial professional, a CPA, a tax planner, all of those good things before you apply any of this information. If you do, this information isn't for everybody, doesn't apply to everyone, won't benefit everyone. So simply education here as we go on our abundance journey together. Woo! I'm excited. This is going to be a good one. All right. So today the topic is having an abundant retirement. And I know we talked about in a few episodes ago about what retirement could be, what financial freedom could be, what that could look like, and maybe not waiting until retirement to live abundantly in terms of our relationships, our ability to give back to our community, the hobbies that we have, our family, leaving a legacy, all of these incredible things, including travel, geographic freedom. But the twist on this topic today that I'm going to talk about is a little bit different from that because a lot of us have 401ks and IRAs. So I want to dive deep into that topic and maybe give you some new information that your company or Wall Street didn't give to you that you could apply to your retirement as you look for abundance in that area. Let's start off with talking about what does abundance in retirement mean to you? If you're anything like me, I was told, given my health circumstances aside, that was a different conversation. But the culture, American culture, corporate America said, retire and be financially free at 65. Or maybe not financially free, but at least you don't have to work after 65 because you have enough money saved up to be able to live. Hopefully, right? But there's always this chance of what if the stockpile of investments or cash that you have at that time doesn't last long enough or your expenses are higher than expected. We're going to dive into that and talk about a few benefits and different ways of thinking about these retirement accounts as we look at our abundance journey together. Before we kick off, though, I do want to make sure that you take a minute to share this podcast and this episode with a friend. I am so loving and enjoying doing this podcast. I've heard from many of you about how much you appreciate the information and perspectives and guests that we've had. And the truth is, I want to continue to add massive value to you as my audience. And this endeavor is expensive and time consuming, which is fine. I am delighted to do it. But I would be so appreciative and it would help us have this mutual go-giver relationship if you could share and of course, write a review for the episode. The more people that listen to this, the more encouragement I get to be able to continue to share this information on abundance. So if you know folks, not if, but you do know folks that could benefit tremendously from this episode, please go ahead and give it a share. Okay, thank you. Thank you so much. So let's take a step back and again, remind ourselves about what the Secrets to Abundant Living podcast is all about. Money is not the destination. We talk about it every episode, but it is so important because we're hearing from American culture over and over again that money should be our goal. Money is everything. We should sacrifice all areas of abundance in order to achieve the money goal that we have. But the reminder is, once again, that money is simply the vehicle to abundance. And these solo episodes are where we discuss this vehicle, dive deeper into specific financial abundance topics. And the topic happens to be today of retirement accounts. And wherever you are on your journey of abundance and where your vehicle is, it's important to understand, maybe you're in a W-2, you've been contributing to a 401k or an IRA, or maybe you have stopped contributing because you have a different perspective on where else you can receive income for retirement. Maybe your retirement is earlier than what you expected, than that 65 years of age that we mentioned earlier. But I mentioned all of this so that you understand that this episode will apply to you regardless of what that looks like, okay? If you're like me, you grew up and you heard, and again, this was mentioned in a previous episode, that retirement is having this pile of money, of stocks and bonds and assets where we buy it low, we sell it high when we reach that magic number of, 59 and a half currently in May of 2024, where we can start taking distributions. And you start chipping away at that pile of money that are in these retirement accounts and hope that it lasts until you die. And you can still pay your medical bills, your housing expenses, and maybe have a tiny bit left over for retirement. The other idea that we've talked about before, but it's worth reiterating, we can also buy assets that spin off cash flow, whether in our retirement accounts or not. And the cash flow that comes from those assets doesn't run out if they're cash flowing assets, because we don't sell the asset, but instead we live off the income that the asset spins off. So we think of the goose that laid the golden egg of, we never sell the goose, the eggs just keep coming, and the eggs increase with abundance over time, keep up with inflation. Two very, very different perspectives on how retirement can happen. But either way, whatever path you're on, whichever one you've decided is best for you, I still think it's worth and it's relevant to talk about IRAs and 401ks that many of us are told when we join corporate America, when we become an adult, we got our first big boy or big girl job, that we must contribute to. It's so important. It's tax, free or deferred, reduce your taxes, da, da, da. You've heard all of this, right? So this is going to be a little controversial. I'm going to pick apart a few things that I think you should know about. And again, you can decide whatever you want to do with this information. It's completely up to you. But I was astounded when I wasn't ever exposed to this information. And I felt like I was robbed of a choice. I felt like I was robbed of important information that could impact my future, especially as I got older. And many folks retire because they don't have the physical ability to trade their time for money because they're older in age, and having enough income to live the abundant retirement to our last several decades of age is imperative. Why should we have to sacrifice contribution to community, enjoying the hobbies that we love, leaving a legacy for children or grandchildren or other people in society, caring for community, traveling, living where we want? So the first thing that I want to pick at, and I'm excited for you to go on this journey with me, is that IRAs and 401ks, especially the traditional, right? So there's traditional and then there's Roth, but the traditional accounts are taxed. You can contribute pre-tax money, right? And then once you start to withdraw from the accounts, that's when you're taxed. So the notion that I hear discussed in our culture is, well, yeah, in retirement, you are past your peak earning years. So maybe your tax bracket will be less. And so if you're taxed now with this money, your tax bracket may be higher because you're at peak earning years. And so you can kind of game the tax system by putting money, pre-tax money, in your 401k or IRA, and then have it hopefully taxed at a lower tax rate when your income is less when you retire. What? Wait a second. Let me know if you've heard this, because I've heard it multiple times. I've checked with people. I'm like, hey, is it just me that's hearing this? But those are the assumptions, right? Those are the assumptions of why you should tax defer. Oh, the money grows tax-free. Okay, does it? Here's my gripe, and I have several, but I'm going to challenge you and everybody here with this. We've all experienced quite a bit of inflation over the past few years. The dollar, the currency supply, increased by 40% in 2020 and 2021. And if we remind ourselves, inflation isn't an increase of prices. Inflation is an increase in the currency supply, and an increase in prices are simply a symptom. Inflation was quite a bit higher than the Fed's 2 to 3% annual target rate, right? Back in 2020, 2021, 22, and even part of 23. So what I would submit to you is, if inflation keeps going up, which it will, even at a 3% clip, let's just say from here on out, let's say you're my age, you're 42, you're going to retire in 20 years, round numbers. Excuse me, 24 years, let's just say. I'll retire in 24 years at 66. Even if inflation is at 3% a year, over those next 24 years, inflation will double cumulatively over those 24 years. Meaning that what it takes, let's say I have $100 today in 2024, think about what I could buy for $100. In 24 years, it'll take $200 to buy that same amount. Follow me here. I know I don't want to get too numbers jargon. I don't want to get this too detailed. But here's the point. The tax brackets aren't going to change, or may, but likely won't. So as income, hopefully, best case scenario, keeps up with inflation, you may think you're getting a pay raise, but actually what that money is able to purchase is less, but you're still being pushed into a higher tax bracket. Higher tax bracket. So this assumption that once we retire, that, we'll be earning less money and therefore we won't be paying as much money on the taxes that we owe in these tax-deferred accounts like an IRA or 401k. I think that notion is fundamentally flawed. That's a big bet to take. I don't think inflation's going away. Again, even at 3% a year, which is, I would argue, low, maybe you'd argue moderate. Either way, I don't think that's a wild assumption to assume that you'll be in a lower tax bracket when you retire, when in fact, maybe the money is just keeping up with inflation. Your savings, your investments are just keeping up with inflation. All of a sudden, you're maybe at a higher tax bracket when you retire, when you start pulling money out. So is it worth it to invest in a tax-deferred account when inflation is baked into the monetary system? Taxes are at, income taxes we're talking about, are at a historic low. I don't know. I think that's a pretty wild assumption that many of us just take for granted. So, the alternative could be, of course, so invest in a Roth account. A Roth account is where you pay the taxes now and then your money grows tax-free, right? Once you retire, when you pull those gains out from your investments, that money isn't taxed. So, okay, that makes sense. I can see that. I can definitely follow along there. But here's the other aspect. I'm not planning to have a lower quality of life in terms of abundance, in terms of whether it's money, whether it's travel, whether it's quality of life, giving, my legacy, contributing to my community, all of these things. I expect those to continue to grow and through retirement until the day that I die. I don't expect to slow down. Now, you tell me, obviously, this is my story. You can talk through your own, and maybe you do plan to have a lower income or lower abundance monetarily or in other ways in your retirement. But for me, that's simply not the truth. I will not accept that. I'm not planning for it. And I believe firmly that what we plan for, we get, right? Or at least we get closer to it. So yes, being taxed at today's rates may help you. That may be an answer. Again, not financial advice, but it can be a powerful tool, knowing that inflation is coming and that it will continue. And the fact that your funds, your retirement, and whatever assets you decide to invest in can be taken out tax-free in a Roth account could be a powerful choice. So you've probably heard that. You probably understand that. But I really don't think inflation and how that impacts the income tax bracket you're in, I don't see that discussed enough in our society, whether it's financial planners, whether it's just as we talk about money and our own personal financial education, banking on your tax rate, your personal income tax rate being lower when you retire, for me, is incredibly risky and is not a risk I'm willing to take. Here's the other gripe that I have with these accounts. And this isn't all going to be doom and gloom. Trust me, we're going to be talking about some different ideas and strategies and tactics that you can deploy. Again, just education that I do. Have you ever thought about having multiple streams of income? Instead of relying on just one stream of income where you're trading your time for money, how would you like to free up more of your time and live a more abundant life? As a listener of the show, you're invited to attend one of our upcoming trainings where I'll give you an inside look into how you can add passive income and get all the other perks of recession-resistant real estate investing without the headaches of being a landlord. I'll also be sharing some hidden mistakes to avoid and the criteria I personally look for when evaluating potential investment opportunities. To reserve your seat for free, go to silvuscapital.com/webinar. Again, that special link to reserve your seat for free is silvuscapital.com/webinar. I look forward to seeing you on the training. And now back to the show. My other gripe, other than counting on maybe being poor and having less abundance in retirement and or being in a higher tax bracket due to inflation, not because I've become richer, but just because inflation's gone up, is the lack of choice and control in IRA and 401k accounts. Most people I talk to, and myself included about 15 years ago, think that they only have access to one asset class inside these retirement accounts, and it's paper. Paper is one asset class. Stocks, bonds, and mutual funds. Raise your hand if that's what you think you have access to in those accounts. And you may not be wrong. Your current company's 401k may only let you invest in stocks, bonds, and mutual funds. Your current one. But stay tuned. There may be some more information here. And what really gets me, because I see myself in this, if you would have asked me 15 years ago, I would say, yeah. So I'm investing in my 401k. It's incredibly important. Oh, there's free money that my company, dangles in front of me if they'll match up to a certain amount. So I'm doing the right thing. And I have a well-diversified portfolio of stocks, bonds, and mutual funds thinking I'm diversified. Wrong. At least for me and my definition of diversification. So my challenge to you is to question, what does the diversification mean to you and why is it important to you? For me, the purpose of diversification is to have non-correlated assets, assets that go up and down in value, not at the same time. The spoiler alert is that paper assets are correlated. They're all one asset class. So if I want to reduce volatility and increase the abundance, the financial abundance that I want for myself, for me, the goal of diversification, to have non-correlated assets to smooth out volatility, is not to be invested in one single asset class. It's to have several asset classes. So what do I do if my employer, if my main way to save for retirement, my 401k, only allows stocks, bonds, and mutual funds? What I learned and what I'm so excited to talk to you about today is the fact that there is something that exists called a self-directed IRA and a solo 401k. And I could not believe that corporate America, my financial advisor, just American society and culture in general weren't talking about this, because a self-directed IRA and a solo 401k gives us the ability to invest in non-paper assets. I mean, you can still invest in paper assets. There's nothing wrong with that there. But the key is taking back control by having choice. So imagine in your retirement account investing in businesses, physical gold and silver bullion, private lending, and then, of course, actual real estate, not paper representation, actual real estate, and so much more. It's mind-blowing, right? And if you're like me, you're looking for diversification, you're looking for non-correlated assets, this is the key. Because again, look, I didn't start to think about alternative asset investing until I was in my early 30s. I already accumulated a good amount of retirement in my company's 401k. So the money was there. The money was locked in, but I needed to make sure to find a way to take control, at least for myself, because I didn't want my entire retirement, my investing on the side, aside, say that twice, to be dependent on a single asset class that was where all my investments were correlated. Whoop. So why haven't you heard about this before? Why? Why is this not talked about? Why is your financial planner not talking to you about this? Why is your employer not telling you about this? I don't know for sure. I don't have all of the answers, but I'll tell you this. There are a lot of people that make money off of your retirement accounts being in assets that they can make money off of. Wall Street, financial advisors, big 401k custodians and IRA custodians, they get some of them. This is not across the board. You have to research this for yourself and figure out where you stand. But a lot of folks make money off of these paper assets when you invest in them. A lot harder to make money off of what you invest in your retirement account if it's actual real estate or actual gold and silver bullion or actual businesses or private lending. They don't get a cut from that because you're off doing it on your own. That's not within their purview of visibility, of control, and just, take some fees off the top of that. That's really easy to do with stocks, bonds, and mutual funds. So maybe there's a correlation as to why that isn't promoted or this knowledge isn't far and wide. I'm not trying to get you to put on your tinfoil hat, but it is an interesting thing to think about as you explore A, what your goals are for retirement abundance, B, how you're going to get there, and C, what tools are at your disposal in terms of control if you want more control. So I want to dive a little bit deeper into how all of this works in case it resonates with you, in case it's important to you, in case it's part of your abundance vehicle financially. So if you want more choices in your retirement account beyond Wall Street, the key is to change the custodian of your retirement account. And I'm not talking about pulling money out of your retirement account. I'm not talking about that at all. There are fees associated with it. You may have to pay, the income tax and the early withdrawal fee. No, that's not what this is about. Not talking about pulling money out of your retirement account early. This money stays there. So no early withdrawal fees. There are two different scenarios to think through. First, if you have just a traditional IRA, what you can do is find an IRA custodian that allows you to self-direct. And you can change the custodian of your IRA to this self-directed IRA custodian. And all of a sudden, the entire world opens up to you. Not the entire world. You have many more options, let's say that, to invest in beyond stocks, bonds, and mutual funds. Now, if you've got a Roth IRA, that's a little stickier. We can talk about that in a bit, but that's something to talk to a custodian about to understand what that may or may not look like. But a traditional IRA, meaning these are dollars that have not been taxed yet, it's fairly simple. Once you create that self-directed IRA, you can then direct the custodian to where you'd like to invest. So I've done this with real estate. I've done this personally with gold and silver bullion as well, and several other asset classes. Again, just education. Not saying this is right for you, not saying you should do it, just a new way to take control of your retirement abundance. Now, if you have a 401k from a previous employer, you can roll that 401k to a self-directed IRA or a solo 401k. And actually, a solo 401k is also an option for your traditional IRA as well. I should have mentioned that earlier, but that's okay. So again, your previous employer, you no longer work for this employer. You have the ability, I empower you. You are empowered to take that account and identify a self-directed IRA custodian or a solo 401k custodian. There are some differences. And that will open up a whole portfolio of options for you above and beyond stocks, bonds, and mutual funds if you'd like. And again, when you change custodians, you're not taking money out of these accounts and paying a penalty. So this isn't pulling money out, this is rolling over. And the same rules will apply in terms of accessing the money and paying the taxes later, et cetera, et cetera. So from there, again, you can self-direct and tell your self-directed IRA custodian or solo 401k custodian to invest in assets of your choice. And about half of my investors that invest alongside me in my actual real estate investments use these retirement accounts to invest alongside me because they want diversification and not to be in just one correlated asset class of paper. It's really cool. So they get the benefit of investing alongside me in these hand-picked, specially curated investments that I find throughout the country, and I operate them, and their retirement accounts get to benefit from those investments. It's really cool. It's important to understand that your current employer very likely will not allow you to use your current 401k associated with your current employer to do this. You generally have to wait until you leave that company to roll your 401k into a self-directed IRA or solo 401k. I know this has gotten super technical, but I just want to be very transparent. So the summary is if you have an IRA, a traditional IRA, you generally can self-direct. If you have a previous company's 401k, you can generally self-direct. Your current employer's 401k very likely probably cannot do that, but it's worth checking. It's worth checking that out. And again, your choices are precious metals, businesses, private lending, real estate, of course, and a whole host of other options other than the stocks, bonds, and mutual funds. And I think this is so important for me, it was to empower myself to take back control from Wall Street and to invest in Main Street. If I choose, I want to invest in Main Street, not necessarily 100% in Wall Street. And this isn't to say stocks, bonds, and mutual funds are bad. I don't consider them bad. I own stocks, bonds, and mutual funds myself. So please don't misconstrue what I'm saying. This is not something where we're vilifying any asset class. For me, they're all valuable in my well-diversified portfolio. But the Wall Street lie of, oh, stocks, bonds, and mutual funds, magic, you're now diversified, for me, doesn't hold true with how I understand diversification for my portfolio and what my goals are. So to wrap this up, make sure you check with your CPA and you're doing all of this to make sure that you're not inadvertently pulling this money out, but your self-directed IRA or solo 401k custodian of your choice is very well experienced in this process and can walk you through how to do this without triggering a taxable event or early withdrawal fees. I see my investors do it all the time. It's not a very complicated process, but does take a little bit of time. And you just want to make sure you've got someone like the person handling your taxes that's seeing every step and making sure that you're doing it the right way. Is this exciting? I think it's thrilling. I think anytime we can take more control and have more choice, it is a massive win. And some of you listening may not have a retirement account at all. You may be like me, where you mitigate all of your taxes through other investments, and you don't have to necessarily use a qualified retirement account to do that. But many people, many high income earners that I talk to that are very successful in their jobs, that are great at investing in their IRA or 401k, this is mind-blowing information that they're really excited to take action on. I see it all the time with my investments, and I want to make sure you're empowered with the information to have the maximum amount of financial abundance in your retirement as well. I'm going to put a few resources in the notes for the podcast. The first one is a book called 401 Chaos by Andy Tanner that you may find really interesting. It's a free download, I think. If not, it's just a few bucks from Amazon. So we'll put that link in the show notes. And then a few solo 1K and self-directed IRA custodians that I've gotten to know. I receive no financial benefit from talking about them. I have no skin in the game other than just to help you all get started with some companies that I've heard good things about from my investors, and I've had good experiences working with them. So at least it's a place for you to start if you're interested in going down that road. Okay. Well, thanks for going on this really exciting retirement abundance journey. Again, your retirement, I would argue, is a time for you to continue to expand and grow. And that includes your abundance as well. Planning to be poorer, planning to have higher taxes, planning to have less abundance is not what we're about on this podcast. And I would encourage you to question the beliefs that may have been implanted in your brain by our culture and decide if there is another way that resonates more with you and with your plans and how you want to live those last decades of your life. Empowerment is the key. Thank you all so much for joining us today. Please don't forget to share this episode with your friends that you know will benefit from this information. And we will see you soon on the next episode. Have an incredibly abundant day, everyone. Thanks.
Thank you for joining us on another episode of the Secrets to Abundant Living podcast. We hope you found inspiration and valuable insights that will empower you on your journey towards abundance. If you enjoyed today's episode, don't forget to subscribe, rate, and leave a review. Your feedback means the world to us, and it helps others discover the secrets to an abundant life too. Stay connected with us on LinkedIn, Amy Silvis. Keep striving for your goals, nurturing your relationships, and embracing the adventure that is life. Until next time, we wish you an abundantly fulfilling day.